Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's Closing Bell is sponsored by CattleFax, the deciding factor. Last weekend, Saudi Arabia announced plans to lower the kingdom's crude oil output to 9 million barrels per day beginning in July. 9 million BPD would be a 10% reduction from Saudi Arabia's Jan-Feb average output, around 10 million barrels per day. Beginning in January, Saudi Arabia dropped into the third place in the list of top global crude oil producers. The U.S. remains the world's largest producer, averaging around 12.3 million BPD year-to-date in 2023. Russia is the current number 2 on the list, producing only 100,000 to 200,000 barrels per day, less than before the sanctions took effect. Western leaders established a price cap on Russian oil last year and banned the imports of Russian oil and refined products. So far, this action only created an opportunity for India and China to become bigger importers of Russian product, increasing their refinery flows and re-exporting the newly refined fuel. Saudi Arabia, long held as the de facto leadership of OPEC, plays the role of the marginal producer, lowering their own output to decrease total cartel production. The surprise output cut, however, did not lead to higher prices in the energy complex. Spot WTI crude oil, currently the July contract, was 41 cents higher on Monday, but ended the week down roughly $1.30 per barrel. Despite repeated warnings from Saudi Arabians that oil market short sellers would feel economic pain, the output cuts were quickly shrugged off by the market. Increased production from both the U.S. and across OPEC plus countries like Russia and Iran have reduced the influence of Saudi Arabia's marginal barrels. From 2005 to 2015, OPEC plus producers averaged around 50% of the world's crude oil supply. As the U.S. ramped up oil production and exports, OPEC plus's share of global supply fell to current levels, around 45%. While the top 3 global crude producers are all capable of output above 10 million barrels per day, the next highest global producers are all sub 5 million BPD. However, incremental gains among ranks 4th through 10th on the list of global producers have added around 100,000 extra barrels to supply in the last 12 months. Spot WTI crude oil prices have traded in a range from $64 to $84 a barrel since last November. This week's highs tested resistance at the 20-week moving average and failed. Commodities in general did slightly better on the week. The Bloomberg Commodity Index was up close to 1% after previously trading lower 4 weeks in a row. Thanks for watching. Remember to visit CattleFax.com. Become a member to see the latest market news and analysis.